Wall Street analysts have raised the price target of the NIO stock to $50 a share. Most of the analysts have been issuing buy ratings for the NIO stock. The company released its third quarter earnings report recently. There have been some great things happening in the background. In this video, we will try to look at the biggest developments happening at the company, go through the earnings highlights. Since the stock had such a good run this year, we will try to analyze if there is any steam left in the stock for further growth or is it due for a correction. So please stay until the end to find out all the details about the great NIO stock. Hi, I'm Arshad Ahmed, founder of DIYstockpicker.com, an investment portal dedicated to help investors make intelligent decisions. This video is for information purposes and please do your due diligence before making any investment decisions. NIO launched the battery as a service model. This was to reduce the upfront cost the customer has to pay to purchase the vehicle. The customers then pay a monthly service fee for battery charging and upgrade. This results in recurring revenue for the company. The company launched the 100 kilowatt-hour battery pack in November 2020. This 100 kilowatt-hour cell-to-pack battery pack has realized 37% more energy density than the 70 kilowatt-hour battery pack. This enables a range of up to 382 miles on a single charge. If the users opt to purchase a NIO vehicle and subscribe for the 100 kilowatt-hour battery pack under the battery as a service model, then they purchase the vehicle without the battery pack and pay a monthly subscription fee of $225. Existing 75 kilowatt-hour battery pack customers can upgrade to the 100 kilowatt-hour battery pack by purchasing the battery pack as a whole or paying a $135 per month subscription fee. The battery as a service model gives great flexibility for the customers. Battery technologies are evolving each day and the chances of batteries catching fire are reduced with each release. Instead of purchasing a battery pack and getting locked into it, customers can purchase a vehicle without a battery pack and subscribe for the battery as a service model. Then as new battery packs are released, they can upgrade to the NIO versions that have better energy savings. NIO has designed a revolutionary battery swap technologies. Customers can go to their battery swap stations and swap their drained battery for a fully charged one in 3 minutes. NIO has established 158 battery swap stations across China and has performed 1.18 million swaps so far, and the battery swap stations are growing each quarter. Here are some of the key financial highlights from their third quarter 2020 report. NIO achieved a record high quarterly deliveries of 12,206 in the third quarter of 2020. It's a growth of 154% year over year and an 18% quarterly increase. In October, they had the best monthly deliveries of 5,055 vehicles. The company has delivered 31,430 vehicles so far this year in 2020. The company expects to deliver 17,000 vehicles in the fourth quarter of 2020. The total revenue was $666.6 million. Which is a 146.1% year-over-year increase and a 22.4% increase from the previous quarter. The expected revenue for the fourth quarter, which is usually their best quarter of the year, is between $921 to $948 million. The gross profit was $86.3 million in the third quarter of 2020. The gross margins are increasing at the company, and this is a very good sign because the company is making profits while manufacturing vehicles. The gross margin was 12.9% in the third quarter of 2020, up from 8.4% in the second quarter of 2020. The net loss was $154.2 million. Yes, we want the company to be profitable, but this is a huge turnaround from where the company was an year ago. And each quarter and each year, the margins are improving. And we expect the company to be profitable and show a net profit in a couple of quarters. The company is cash flow positive from operations for the second straight quarter. NIO has cash and cash equivalents of $3.3 billion on its balance sheet. The company sold about 102 million shares at $17 a share and raised the much needed capital. Yes, this results in dilution for the existing shareholders. When the market conditions are good and the stock is in demand, smart capital allocation dictates that the company raise capital by issuing new shares. When the stock is hot and new shares are issued, it hardly puts pressure on the stock price. But when the management usually thinks that the share price is undervalued, at that times it is better to raise capital by debt. It is these kind of decisions that give you an idea of the thinking and capital allocation strategies of the management. The company has put the capital to good use. It has purchased back its equity interest in NIO Holdings, which is the parent company of NIO China. The company now owns 86.5% of NIO Holdings. NIO also purchased the entire equity interest in XPT Automotive Technology. XPT Automotive Technology mainly designs, develops, and manufactures electric motors, battery packs, and other smart electric vehicle components. Now let's take a look at their charging network. NIO Power has built an extensive network of fast DC chargers and charging services. Customers can choose to have the charging device installed at their home, or they can have access to a vast network of charging stations. They have an app built that the customer can use to locate and track their electric vehicle charges and see the nearest charging station. The payment processing has been built into the app. This is a huge thing because it brings in recurring revenue and also increases a loyal customer base. This is what ChargePoint is building across North America and Europe. XPeng Motors is another fast-rising EV manufacturer in China. They have run into some financial troubles, so they have abandoned their plans of building their own charging network. They merged with NIO's charging network and have transferred all their customers and payment processing onto NIO's network. NIO basically got all the charging customers' information and payment processing details from the XPeng onto their own charging network. Now we will try to come up with a valuation for the NIO stock. The company has a market cap of $65 billion as we speak. The shares outstanding are 1.35 billion. The revenue expected for this year is $2.5 billion. But a lot of things have fallen in place for NIO. The worst is over and the growth runway is ahead. The stock is now trading at 30 times the expected revenue in 2020. If the revenue grows compounded 30% for the next 3 years, so after 3 years, the revenue would be $5.6 billion. If we use a 20 multiple for the revenue after 3 years, the market cap would be $112 billion. Now let's assume that there will be further dilution of the shares, as NIO may issue new stock to raise more capital. So let's say the shares outstanding have increased from 1.35 billion to 1.4 billion. And after 3 years, we calculated the market cap to be $112 billion. So let's divide the market cap of $112 billion by the total shares outstanding then, which we assume to be 1.4 billion. That would give $80 per share after 3 years. Again, that's a ballpark estimate. The share price may be much higher than $80 per share after 3 years, especially looking at the appetite for electric vehicle stocks in the market and a growth story like NIO. I hope you found this video informative and useful. I have analyzed the Palantir Technologies stock, which is another exciting growth stock, and you should see here on the end screen. And I hope to see you in that video. Take care.